I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, Portfolio Manager and Consultant at Feneck Consulting. Thank you so much for joining me. Great to have you here.
Great to be here. Thanks, Charlotte.
Yeah, it's good to be catching up not too long after our previous conversation at VRRCF, but we do have a lot going on. And right now, as we speak, March 4th in the morning, we have gold. I just looked at the chart, about 2,100. And well, of course, we will try to publish this interview as soon as possible, but I want to take a look at the gold price with you. Maybe we look at upside and downside scenarios, just perhaps where we go from here.
Yeah, so we were sitting here a year ago on the floor at VRRCF, and we were talking about 1,790 to 1,800 holding. And we gave your listeners a number of reasons why that would happen, and it did happen. And then we had the March financial crisis, which put another floor on gold. If you remember, through most of the summer and fall, we had a $1,900 price with absolutely no days below 1,900. I mean, just unbelievable to me, yet the gold stocks were waning. Then we had the unfortunate events of October 7th, which put another floor on gold, in our opinion. And that still will continue to put a floor on gold because the situation is fluid. It is developing, meaning that there's so many other things that are happening now geopolitically since that unfortunate day that I don't think investors are paying attention to. And now we have November 14th CPI print where the market rallied. We had a December Fed that was pretty, it changed their tone about rates, and that got the market really excited. And then we had gold, flirt with 2,100 at the very end of the year, but then we had resistance, and that's normal in a rally, right? You're going to hit certain levels that you're going to have to test. But now, as we sit here today, March 4th, we're at 2,100 plus on the intraday. We need to see 2,100 closed there once or twice to get more comfortable. This week, unfortunately, we've got Jerome Powell speaking on Wednesday, which could throw some cold water on the rally, but you never know. I mean, he in his history has talked at non-Fed days and moved the market, so it's always important to pay attention to when Powell speaks. But long story short, things are moving in the right direction. We've been calling for gold to be above 2,000 an ounce, for quite some time now. We're there. And we think that, once you get to 2,200, it's going to be, a kind of a FOMO trade in terms of some of these gold stocks. I think the downside risk is retesting that 1,800 kind of round number. We got to around 1,820-ish right before the October 7th events, if you remember. So we were headed that way, but then we bounced hard, and I just don't think we're going to get to the 1,790 to 1,800 level again. If we do, I'm very confident we would hold that level.
Okay, I think that's very good context on gold and how we got here. And you mentioned a number of times the gold stocks. And I know a lot of people that I speak to are looking at the gold price. They see it's quite high. And gold stocks, not so much. So a lot of people are looking at that as an opportunity. So maybe we check in with you and how you're approaching the gold stocks right now.
Sure. It is an opportunity, and it's also extremely frustrating for investors because there is such a disconnect. In fact, I wrote about this in my newsletter, the Feneck Commodities Report, just last week, that I can't remember even looking at 2016, the disparity between the gold price and mining stocks. Because back in January of 16, we had that kind of disconnect with gold just really depressed, but we didn't have the backdrop for gold that we have now, which is really positive. So I think gold stocks look really, really cheap. And, one of the metrics we've talked about on your show before is relative strength index, using RSI as a way to gauge that. Just as a quick look, there's a lot of gold stocks right now with RSIs between 27 and 35. And when you get to that 30 level and get to near to that, it's usually a buy. Look at Newmont, for an example, right? Newmont gets downgraded by someone last week, and I was very vocal about that, saying this is probably the low. That was last Monday, for gold stocks. When you see Newmont downgraded on a quarter where they beat by 4 cents, it's like, come on, guys. I mean, what are you looking at? It's like the time to downgrade stuff was months ago. And to me, I'm not singling that person out, but as a former analyst, you have to take a stance sometimes and not just do what your firm tells you to do. You got to think independently. And it's just frustrating to see that. I know that a lot of investors, back me on that. So I think Newmont, with a even though they cut their div, is still very attractive yields. And it's the leading company in GDX. It's 12.8% of GDX. GDX, for those that don't know, is the largest ETF in our sector, right? So ETFs, I have a background in. I have a background in mutual funds. When you look at technical support on GDX, it was right around 25.62. We hit 25.68, if I remember correctly, about a week and a half ago. Twice it bounced right there. And so that was telling you something. And now GDX is firmly above 27. So I think we're headed back to 30 on GDX pretty quickly here. When you look at the top three holdings of GDX, it's Newmont, NEM, then it's Barrick, GOLD, then it's Agnico, AEM, and all three of those beat earnings. So, broadly for the big caps, I like what I'm seeing. I can't remember a quarter like this where everyone's beating and yet the prices are so depressed.
Okay, I'm going to come back and ask you for gold companies that you're watching. But before we go there, we check in on silver as well and get your outlook for silver this year. It's another interesting one.
Well, I have a background in silver, and I always try to temper that with just reality, right? Like you can't fall in love with investments. I'm very hopeful that silver will do well, but at the same time, I've got to lead people in the direction that I see, which is that 26 is major resistance. 30 is another resistance point, right? So like once you get through 26, you're going to get really good price action. But to get through 26, we need a little more time. We're sitting here at 23.30 right now. That 25 to 26 area has been problematic for months. And we've said that on your show a number of times. And so once we get through that, things will start screaming on the silver equity side. But this is the time to start making your wish list and making some small buys or large buys, because when you look at the torque we saw on Friday, March 1st, look at some of these, look at a small producer like Silver X, up 9% that day. I just met with them last night for dinner, and they have so much promise in Peru. Peru is one of those areas where it's such a silver and copper rich district, but Castillo put a huge cloud over that entire area, and Castillo's in jail. Like, let's move on. It's been 14 months and he's not a problem anymore. So Peru looks really interesting to us as value investors. Look at someone like a developer like Aftermath on Friday, up 15% in one day. It's like these things have so much torque because they have a lot of ounces in the ground, and investors like me know that. So doing the homework to understand that, these companies are going to be the next leaders when silver breaks out. That's kind of what I would suggest people do, is work with a professional like myself to get an idea of which names would fit that bill, or do the research yourself.
So those are some silver names that you'll like. Let's look at the gold side as well. Often we follow up on companies that you've mentioned before. We are at PDAC, so if there are any here that you would want to mention, that would also be topical.
Yeah, so I'm going to get an update from Guanajuato Silver tomorrow, and I know that sounds like a silver name, but in talking to them last week, they have about 40% in gold right now. So I think that's another important thing for investors to do. Just because a name says something, XYZ silver or XYZ gold, a lot of times when you look under the hood, they may be half gold. Look at a lot of the mid-tier silver names like Coeur, CDE, Hecla, HL. A lot of these names have a significant amount of gold now, but they're still trading like silver stocks. So that's a real value for us. Who else am I meeting with here? There's a lot of companies. I have 21 meetings set up in the next 2 days, so I'm a little bit...
You don't have to name them all.
No, I won't. But your listeners can always hit me up for an update afterwards. And I would encourage people to look at our newsletter as a starting point, because it's only $65 a month. It gives people a lot of information. I write up names that I meet with here, not all of them, but I'll write up a lot of those 21 meetings and put them out there to the public. We try to be as transparent as possible, and that's just a great value, we think.
Very good. Okay, thank you for going into that. And before we move on from precious metals, I want to bring up the Fed. So we always seem to talk about the Fed when we meet, and you've consistently said the Fed means business when it comes to getting inflation down. And so I'm curious what you see coming in 2024. I know the Fed wants to proceed carefully, and I think people have already adjusted their expectations for what we might see. So what are your thoughts?
Well, I want to point out first, before I forget, what happened on Friday. We had the ISM number come out, and it was around 47.8, if I'm remembering correctly. The estimate was 49.5. Anytime you're under 50, that shows an economy that isn't as hot as people think. So the market loved that, right? The broad market loved that. The gold market popped on that number, in my opinion. And that's because the more soft economic data we get, the more likelihood of Fed cuts, right? So that was a real positive. In my view, we need to see non-farm payrolls do the same. That's coming up this Friday. Every first Friday of the month, you have to pay attention to that number. Following that, of course, we're going to get the CPI read, which is more important than anything, I think, right now, making sure the Fed is comfortable with the downward trend. You know, over the last couple of months, Charlotte, we saw an upward trend in CPI, right? And so that's what's holding gold and silver, bulls back a little bit is this kind of choppiness we've seen. To walk you through it, November 14th, we had that CPI read that got everyone really interested, including myself. It's kind of come away from what I was telling your listeners. Like, I was getting more bullish as a result of that. And then we saw the December Fed meeting where Powell was really kind of dovish almost, 17 of 19 voting members were willing to talk rate cuts for this year. And some of them were up to 125 basis points, meaning a 1.25% worth of cuts. But let's look at what happened. Since January, nothing, right? No action. March 20th right now, there's a 7% probability of any action. That's probably going to be nothing. When you look at May 1st, that's going to be the key meeting, in my opinion, coming up, because you're going to look at maybe like a 40% probability right now of a rate cut. If we don't get a rate cut there, I think the market, meaning the broad market, is going to correct because we have a lot of this move predicated on rate cuts, right?
Yes, and I'm sure that we'll check in with you closer to that time. So we'll watch for that. We'll leave precious metals there for now. And I also want to ask you, because you have a conference coming up on energy transition metals and commodities. So I wanted to talk about that. We've talked before about energy. We've gone over uranium. We've done a little bit of oil and gas, but this is more energy transition. So I want to hear your thoughts on opportunities there in terms of, the coppers, the lithiums, that kind of thing.
So the conference is April 29th and 30th in Washington, D.C., which is my old hood. I spent a lot of years there. So I'm going to drive a lot of U.S. retail to the conference. We'd love to have, more CEOs take notice of this conference as the years progress, because we think it'll be the premier conference out there for, copper companies, lithium companies, uranium companies, right, in the U.S., meaning that so many of those CEOs would come to me over the last few years to say, hey, we want to go to Beaver Creek. We can't get in because there's a wait list. And so, Misha and Jessica, who will coordinate that event, were kind enough to look at this type of conference to address that need. We have over 60 companies already on the lineup. We've got some great speakers outside of myself. Rob McEwen, we've got Cameco CEO. We've got a lot of people from the DOD, DOE. So it's going to be a robust lineup, and I'm really excited for it, But to address your question, battery metals, like copper, right? Copper to me is just a screaming buy here because everyone talks about copper with regards to population growth, with regards to electrification, yet copper was down last year as a commodity. How is that possible? It's mind-boggling and so frustrating for investors, including myself. But you have to look at that and say, okay, it's just taking longer to get to the end point, right? There are some copper stocks that have made a move here. VR Resources comes to mind, VRRCF. What caught my attention with them was actually their diamond project in Canada, because I think it's the first major diamond discovery potentially in a couple of decades. But they also have a copper project in the U.S. right near where I'm at the western U.S. When you look at it from, aerially, it's got infrastructure, it's right near a highway, but they just need money to drill. And that's so true of a lot of juniors, regardless of copper, uranium, gold, right? They just need the money to prove out what they have. And that's been the biggest challenge this year and last year, is finding capital, because investors are getting a little more discerning, I'd say. maybe a lot more discerning, and not just throwing money at investments because a lot of them haven't worked. I do think VR is going to work. Mike Gunning's been at the helm for over a decade at this company, but has 25 plus years of experience, and that's an interesting one to us. There's so many good copper stocks at this price point, under $4 copper, and I would encourage people again to look at aligning themselves with a professional to kind of get an idea of what, because all these companies are not created equal. There's a lot of bad operators right down the hall. There's a lot of great companies right down the hall. You have to do one of the things I've said many times on your show is it's not just what you buy, it's what you avoid that makes you successful. And we like to think we have a little bit of knowledge in that space because I've, been doing this 30 years and I've been in the sector for 24 of those years. So I take it really seriously. So yeah, we would love to have any high net worth clients contact me about April 29 and 30. I'll do my best to get you a complimentary pass, or at least do what I can to discount your admission. And we'd love to see you there.
Okay, and of course your contact details will be in the video description for people if they want to find it. I think we can leave it there for now. This was a good conversation, but did you have any final thoughts to leave investors with?
Yeah, just make phone calls to companies right now. Like, this is the time you want to do your homework to get any questions answered about what you own and what you're thinking about owning, and if you don't have the time to do that, because we work with a lot of lawyers, doctors, construction workers, people that just don't have the time to do that kind of work, then let me do it for you. That's why I'm here, working really hard, with meeting last night and 21 meetings the next 2 days to try to get all of my followers and clients like the truth about what's happening at these various companies.
Okay, very good. Well, I will let you go for now. It sounds like you have a lot to do, but we'll check back in with you soon. So thank you so much for being here today.
Yeah, of course. Thanks, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is John Feneck with Feneck Consulting.